We started in 2018, right in the middle of crypto winter, which was awesome because we got to invest in a bunch of companies at really low valuations. But more importantly, we got to buy the digital assets because we bought Bitcoin, Ethereum. We ended up buying Solana and the Graph at really low prices. And those have all done extremely well for that fund. Raised second fund in 2020, which was getting closer to a normalized market, kind of summer and spring and summer. And then this fund 3 that we're currently raising, we raised 2/3 of it in the teeth of crypto fall, where people were crazy and prices being paid were crazy. And now we're definitely in winter. And the last thing I'll leave you with is I am concerned that everyone wants winter to be over, but it feels to me a lot like the physical summer months into the fall months of 2018, where Bitcoin had fallen from 20 kind of all the way down to 6 and just kind of bounced along 6,000. But it made this crazy pattern called a descending triangle, where every bounce off 6 was lower. And then ultimately on November 14th, I think, or 13th, we busted through that 6,000 and we were at 3,200 almost instantaneously. And I do fear that. I'm not saying that's going to happen, but if you look at this pattern we're in right now, where we're bouncing off 29 and each bounce is lower, that usually doesn't end well. Again, not a prediction per se, but it does make me a little nervous. I think there is a logic to the up move of the cycle being smaller each time. Right? It's the law of large numbers. In the 2009 to 13 run, we were a science project, right? I mean, there was no there. There was very little participation, very little volume, a lot of manipulation. And in particular, that big price spike, in hindsight, most of it was manipulation. So it wasn't real. So when now people look back at that and say, oh, well, we should go up 40x. Well, no. I mean, you can't manipulate a $600 billion asset the way you could manipulate a $6 billion asset. Just can't do it. So then you go to the 2017 cycle and it was a 20x move. And everybody's like, oh, well, we should at least go up that high in the 2021 move. Like, well, no, again, half the size of the market. And so there's a natural logic to me that if we go from 1,000 to 20,000, okay, that's a 20x move, and we go from 3,200 to 70,000, that's actually coming close to that same type of move. And the idea that we look back to that 13 that was just price manipulation at Mt. Gox, it just doesn't make any sense. So I think the cycle is going to be with us forever. And it's because of the way the halving rewards work. And Bitcoin is the king, right? All these other coins, all these other projects, they're all related to the flows into and out of Bitcoin. And that cycle certainly impacted by macro factors. And we can make the case right now. You and I could make a really strong case for why Bitcoin is digital gold, right? And that gold has been the perfect store of value over long periods of time relative to the dollar. But that doesn't mean that you can't go for long periods of time where it goes the wrong way, right? The money supply expanded from 2011 to 2019, but the price of gold went down. It went from 1,900 to 1,000. Why? Well, there's all kinds of reasons. JP Morgan spoofing the price of gold and all kinds of other things. But ultimately, over the long period of time, if you zoom out 20 years, 30 years, 40 years, 5,000 years, for 5,000 years, an ounce of gold bought a fine person's suit. It's a perfect store of value. in February, Chinese New Year, every year we get a downward pressure on Bitcoin because the Chinese are selling. Oh, but China banned Bitcoin. No, they didn't. They own lots of it. And Chinese sell to pay out the cash for Lunar New Year. And then in April, everybody had to pay taxes. Okay, so there's selling pressure again. So that selling pressure is correlated, quote unquote, and people look, oh, the correlation's rising because stocks are going down and Bitcoin's going down. But they're not going down for correlated reasons. They're going down for completely different reasons. Again, zoom out and the correlation numbers go back to where they are. And ultimately, money supply for the first time in 13 years, over the last 3 months, contracted. First time in 13 years. Okay. So Bitcoin, again, it's a real-time instrument. It's kind of telling us that. And gold prices are kind of telling us that. Gold prices haven't gone up either. And then when you look at the equity markets are having to digest the fact that they're still highly overvalued relative to future growth. GDP is collapsing. So GDP first quarter was negative. GDP second quarter likely going to be close to zero, if not negative. And people are going to have this realization that, holy shit, earnings are not going to be as good as people thought. These levered equity positions are not going to look good. And so there is that potential for one more leg of deleveraging. And this is why I talk about this is just like 2001. 2000 was the tech bubble, but the crash wasn't in 2000. The market was only down 6% because everybody believed the Fed was going to step in and save us. The Fed put. It wasn't until 2001 when all the fraud came out. Enron, WorldCom, all these bad companies had to admit, yeah, we were cooking the books. And so the market went down 13%. And then in 2022, the debt markets blew up post 9/11, and then we're down 22. Same thing's happening right now. All the fraud is coming to light. People are like, yeah, we kind of cheated on our performance numbers. And then Luna, the fact that Luna and UST was called a stable coin is ridiculous. There's nothing stable about it. It should not have been allowed to be called a stable coin. It was a CDO, except faster and more dangerous, right? It's like the Top Gun line, right? We're going to teach you to fly the F-14 just faster and more dangerous. So that's what UST was. And the fact that someone exploited it and sent it to zero shouldn't surprise anybody, because it wasn't defensible. Just like, CDOs went to zero. If you take garbage and you put it in a wrapper and call it AAA, it's still garbage. And look, the bear market won't be over until Doge and Shiba are zero. That's the problem. We still have garbage that people think is real, and it's just not. Now, Bitcoin's not that. Bitcoin is real. Bitcoin is the future. Bitcoin is the rail for the future of finance, and a perfect store of value and hard money. But there's going to be a lot more liquidations between now and the next spring.